Sound check. Check, check, check. About to get into it. All right, welcome to the stream. First thing we're about to do, we're about to go over. We're about to go over the STRAT. All right, so the STRAT is a price action strategy created by Rob Smith. The strategy is basically price action. All right, candle movement, price aggregation, broadening formations, and we use 3 simple candles. Those are actionable candles. Those are this hammer, shooter, and inside candle. Okay, so basically these are actionable signals, right? Inside candles is basically consolidation. Buyers and sellers have agreed on price, chopping around, and basically we're just waiting to see if it break out. Shooters are normally bearish signals, actionable signals, and hammers are bullish actionable signals. All right, so with the STRAT, we use these combos. We got bullish and bearish combos. So a 2 is a directional candle, right? A 2 is a directional candle. When you're looking at, actually, let me see if I can find a 5. Give me a second. It's not on my screen. One second. We'll use this. All right, cool. Anyway, so 2s are directional candles. 2s are directional candles. Either there's a 2 up or a 2 down. So like a bullish 2-1-2 reversal would be using the most current 3 candles when you're looking at this. So what will happen is you will get a 2, then you get an inside candle. You will mark the line right here and a line right here because you're looking for either the next candle, which will be the candle that's forming, whether you're on an hour, 15-minute, 5-minute, 1 minute, whatever. That is your actionable candle. That is the candle that you take action on after 1 or a 2. So what happens is, boom, you're looking at the first 3 candles. Okay, you're looking at the first 2 candles. So you got a 2. Then next 15-minute candle opens, you got a 1. It closes as a 1. You mark those 2 levels, boom. When the next candle, which is your actionable candle, whether it becomes a hammer or shooter, or maybe even another inside candle, when it breaks over this level or over the bottom level of that 1 penny below or above, you take entry. As you can see on the bearish side, you got a 2, you get a 1, that would be an entry. Once it breaks over that, you take entry, boom, and your profit target is the bottom of that previous candle before that inside candle. That is how a 2-1-2 combo works. I trade 2-1-2s a lot, and they work pretty well for me. I normally like to find them on hour charts, daily charts, weekly, monthly, whatever. It doesn't really matter. It depends on what you trade. If you're choosing a swing trade, day trade, etc. So that being said, then you go to 2-2 reversals. So that would be a 2 up. Your actionable candle will be a 2 down, right? Because it will be a reversal. So you would get this 2. Then this candle will close a 2 down. You will mark your entry at the top of that 2 down. When it breaks over that line of your 2 down, which is your actionable candle, your one that's actually not closed at opening, when it breaks over, you take entry, boom, push up to your profit target, and so on. So if you look at these STRAT combo sheets, it's good to actually Google this, print it out, and keep it beside you as you're learning the strat. And these are just showing like how, those combos work. You say we'll break over, boom, and you will push up those profit targets. The wick of previous candles are your profit target. So you may have 2, you may have 3. Anything over 5 is a pivot machine gun. So as you can see right here, this is a 3-1-2. This is another combo, which I also like to trade. And look, you had a 3, which is an outside candle to an inside candle consolidation. And then a 2, boom, we came down and it continued. All right, so then you got 2 continuations. I don't like to enter on these. These are basically just continuous candles going up or going down from a move of like a 2-1-2 or 3-1-2, etc. You also have, like you say, 2-2-2 bearish reversals, and you have 2-2-2 bullish reversals. So that's just a quick view of how the strat works. And what we're going to do now, we're actually going to go over finding some tickers and showing you how that works. All right, boom. So here we go. Yesterday, we were talking about Disney. Perfect example. Here goes Walt Disney. Boom. Right here is your actionable signal. Red hammer. Here's your 2, your 1, and your 2. And it went 2 down into a broadening formation. A broadening formation is basically like a greater than less than sign. And it's just go from a higher high to a higher high and a lower low to a lower low. And what happens is price aggregates. Aggregates is basically move, but price doesn't move, it aggregates. And as you can see, when it hits the top of that broadening formation, boom, it rejected right into a shooter. And we went a 2 up. We went 2 up, 2 up. You actually would have entered at the bottom of here. That's where you would have entered. And you would have rode that right on down, as you can see. And that's how that works. So it's basically a pretty simple strategy. All right, so back to Disney. Let's go too far. All right, so we got actionable hammer on the week. We got a new week coming up. Boom, this will be my entry. When the next candle breaks over here, we are looking for this. Right. This is what we're looking for. This is the trade idea. This is what we're looking for. We're looking for this. We're looking for this move right here, right? So, as you can, stop will be down there. The minute we break over, we get some magnitude. Obviously, it's on the weekly chart. So we're looking for this to play out within the week. Activate. As this goes up, we will move our stop, maybe 50%. That, once we get some good magnitude and some movement, move it to break even. And obviously, throughout the day on a lower time frame, we will continue to move our stop. Normally on an hour, every hour close, you would just want to bump up your stops to the bottom of that candle until it decides to reverse. So now, boom, you got your stop here. And then let's just say the next day comes or the next week comes and this candle decides to break down. Doesn't matter. You protected, you out of the trade, and you're out of the trade with profits. No matter, we don't care what happens after that. We're on to the next. And the main thing about that is time frame continuity. As you can see, I have these things up here. This is time frame continuity. Right now, Disney week is red, right? If we can bump down to the hour, we can see more of, we got a green 60, a green 4 hour, and a green day. If Disney decides to break out this week or go green, and maybe even this month, take out a monthly level, and we got full time frame continuity in the trade early, and we probably can ride this out for maybe a week or two, depending on what contracts you get. But That is the importance of time frame continuity. So if you're looking for a bullish position, you at least want that hour in a day. If you're doing a day trade, obviously if you're doing a swing trade, you're going to want more time frames, higher time frames green. The more time frames green, the better, or red, depending on if you're taking a bullish or bearish position. But either way, you're looking for time frame continuity to be in your favor, rather it's green or red, depending on which way you're deciding to take the trade, long or short. So, like I said, if we took that trade, like look at this 2 down hammer, boom, it pushed up. So we will be on the hour chart, right? So this first hour, we will be in. Sorry. On this hour chart. So the first hour, we will be in. The break of this candle here, we will be in there. And then this would have been our profit target. We would hit profit target 1 in an hour. Then this would have been profit target 2. This would have been profit target 3 and 4. And obviously we got all the way up to here. And the whole time we're doing this, this will be our stop. Once we got in and got that magnitude, got those push to profit targets, we would be, here we go. We've been moving our stops up, going from here. Then we would have went here. Then we would have went here. And as you can see, we never got stopped out in 3 hours, right? And then the next candle would have opened, we'd have moved it up here, right? And then we'd have moved it up here, right? And if it decided to reverse, boom, we would have been out. We'd have been in profit. As you can see clearly, we pushed up, came down. Now, personally, on that first hour, in this first hour, we got such magnitude, I'd have probably put a stop here and then here. And as you can see, we came down, and I probably would have went here. And if I got stopped out, just what would have happened. So that's basically how that works. So Disney is a good setup for Monday, maybe the week. Get rid of all this crap. Actually, what I'll do is I'll clear this whole draw set. Market. So what I do is I do this. There we go. Week. 1, 2, 3. Up. Okay, just so I know what's going on when I jump down to our lower time frame. I like to make my week target triggers, and then I will trace my targets, right? And sometimes you find targets within targets, and that is 1. So maybe we get the magnitude up, but if you're gonna take this for a day trade, obviously you're looking for your first target, maybe even the second target here. And then if you're gonna swing some up here, and then once you get up here, we got magnitude up. But we look for day trades. So that's Disney. My alert is set. Obviously, I know where my stop is gonna go. And that's what I like about the strat. Everything's all included. You got an entry. Stop at the bottom of this candle. You can put it at the bottom of this body, right? The bottom of this would be, pretty far. So I probably would put it at the bottom of this body, or even 50%, which could be this line right here, right? And we could put the stop there. Okay, boom. So there you go. You got your stop. So if you get in here tomorrow, this week starts to form, it breaks out, breaks over here, we take entry. If it fails, comes back down, maybe does a 2 down, boom, we out. We know where to get out at. With maybe like a 40-some cent loss. So with that, maybe 10-20% on the option. But look at the risk to reward. I mean, you got all of this right here, short stop. So you're talking about like a $1.50, almost $2 move to, 40% loss if you're playing shares, etc. So that's Disney. You already got Disney down on the list. You can go over a firm. I got over here of what I'm looking at the week. All right, we got full time frame continuity. We got a 2-up. Might get a 2-up continuation. Let's go down to the daily. See what we're looking at. All right, so we got a 2-2 hammer. Boom. I'm looking for entry. Actually, since this is so close, I'll just put it right here. Looking for entry over that. This is my first profit target right here. This is my second one right here. Obviously, the stop. It's most likely going to go here. And I'll probably bump it up as we go along. So that is our stop. So that's a firm. And we can find some contracts. Personally, when it comes to contracts, I don't like to go too far out of the money. You know what I mean? Like open interest volume, pretty high all the way through. And the thing I do like about the strat, that if you think you are going to get the move that you're looking for, you can actually buy contracts basically at the price that you're looking to hit the target at. So let's go back here. So, all right. So we will be entering at 16. We'll leave that. So let's just say we took a $18 call. We look at the $18 calls. I say, okay, cool. High open interest, high volume. We can take that, or we can take the one before, which is pretty good because it's two strikes down from being in the money. I like to stay in the money, but no more than 2 spaces out the money, depending on how I'm playing. So that's one way to do it. So we can look at the $18 contracts. If I add them over here on my contract list, quick and easy. All right. So that's on the daily chart. The move we're looking for tomorrow, I am bullish on this. So we'll be looking for a break of this, and we will be looking for a move like this. Boom. That's possible one. Or we can get some real magnitude and push our way up to profit target 2. Boom. And we're looking for a move like that. Over $18. Contracts most likely be in the money. We'll be moving stops up. Once we break over here, hit this first profit target, maybe take some profit here, hold some runners, ride them up to the top, and boom, about 100% trade, maybe more, depending on what contract you pick. So that's the move we're looking for tomorrow on firm. Remove draw. Okay, cool. Airbnb is another one I'm looking at. So if I seen something on the weekly chart, let me see. All right, so we got full time frame continuity. Look at the monthly. Probably a 2-2 continuation. I'm gonna hop in maybe for a day trade. With all of this being green, if you use technical analysis, that would be inverse head and shoulders. We still got some room all the way up to 153. So I probably would take entry on this. If this daily breaks over here, actually activate this, make this a little wider for us. So what I would be looking for is activate. I would be looking for an entry here. We can. Now, personally, I don't always like to take 2-2 continuations, but sometimes they're just too good to pass up like this because we got so much room. So if this next daily candle tomorrow breaks over, you're looking for the move up, right? We'll be looking for this move right here. Up to 53. Boom. Now, this is a perfect example of a 2 up, 2 down reversal continuation. Boom. We would have took entry here and gapped up. Boom. Kept flowing. Now, being that we got this gap, we got to be mindful. But with full time frame continuity like this, likely chance we're going to push up. You know what I mean? Could we come down? Yep, we could do exactly this. Boom. And we could come back down and fill that gap, right? So that's why it's very important to have your stops in place. And we'll do this, to have your stops in place and, you know, wait for your levels to break. Because if we get some magnitude over this level, we're going to push up to 53, which will be a pretty good play. You're talking about from 150 to 53. And this is on the daily chart. So we're looking to do this in a day. Airbnb has got a daily true range of $3, which is perfect, and an average true range of $4.45. So that is also perfect. So that is what we will be looking for on Airbnb. And we could get rid of this right here. So there you go. But be mindful, we do have a gap here. So we could actually do this. So what you could do, make this bigger so everybody can see. What could happen is this. You can actually mark this here, and we could come down and fill a gap, which is about $1, and then your next target would be here, right? So what you can do is activate. Daily, 2 up, 2 down. So you go either way since there's a gap up, and that's actually how you play gaps. Even like on, actually, I'll talk about how I play gaps in a few. Boom, create alert, low 191, find some contracts, boom, because we got here and then here. All right, so gaps, let's just say this is a 15-minute candle. Boom, it opens up, it's gapped up. Normally happens a lot on spot. Okay, you wait for the first 15-minute candle to close. Boom, you mark these 2 levels and you see which way the next candle is going to go. If you get a gap up and it breaks up over here, over this level, once it breaks, you take entry and ride the magnitude on up. Or it can gap and crack. Boom, gaps up here, and you wait for that 15-minute actionable candle. And when it breaks this level, you take entry here. That is how you play gaps with the STRAT. So you ain't got to worry about it. If you like to play spot, it's always gapping up, gapping down in the morning. That's how you play it. Vice versa if it was down. Let's just say this was a gap, you would play it just like this. If it breaks up, take entry. If it breaks down, take entry. You mark them just like you would an inside candle, right? Cool. That is what we have on Airbnb. Let's go to eBay. All right, so eBay, what we got here? I knew we starting. eBay. Not much. I think it was just there from last week. Probably why I was there. Yeah, I'm not really saying much on eBay. But we will go over this ticker. We got a green, we got a red daily. All right, so this is the perfect example. All right, broke over, hit profit targets, and drop back down. That is the perfect example of why you need your stop losses in place. Once we broke over, you move your stop off to break even. You got that magnitude. Price target 1, price target 2, wicked over, came back down, right? So it went 2, 1, 2. That's just what I showed you on the STRAT cheat sheet. And as you can see, it went 2 up, boom, and came back down. Basically did that, right? So there you go. That's why the STRAT cheat sheet is so important. And understanding these combinations and having your stops in place and risk management and getting in and getting out. All right, cool. What else do we got here? IWM. All right, we got a 2 down on a daily. Move we're looking for is a break over here. Now, IWM in different stocks like this, small moves create big money even still. So boom, we will be looking for the first target. Probably a break over here. Personally, I'm taking profits here or anywhere in there. But once we break over this level, I'm moving my stop up. I'm saying, you know, where we get to. but that's the move we're looking for on IWM. All right. So, you know, because we got this 2 down, so we're looking for a 2 up. And if you look at the strat cheat sheet, boom, this we looking like. Doesn't matter if it's red, it really doesn't matter at all. As you can see, 2 down is lower than this one. As you can see right here, it's lowered. Well, I'll show you, but here you go, 2, 2, 2, and that's what we're looking for. So we go back here, as you can see, 2 higher than this one. So this is a 2 down, boom, boom, and actually to show you that it's higher, you can go, it's right here. Show you that it's higher. See, boom, there you go. So there's like a little broadening formation, right? And then you actually can bring this broadening formation here, and there you go. And the reason for the broadening formation is like, okay, we're at the bottom of broadening formation, boom, we're looking for the breakup. It's probably gonna reject here before we get to this profit target. So it's a good reason if you see your price getting up to the broadening formation, take your profit, which means we could end up doing this. And rejecting right there, that broadening formation, or maybe pushing over, but either way, bump your stops up as you go. So that's IWM on a daily. It's like a good day trade. Time frame continuity ain't bad. This candle open up and push above here, it will be green. So then we have full time frame continuity and nothing to worry about. Well, I'm just showing you examples of how we do this. All right, Disney. All right, DAL. I mean, it's just like this strat just makes things so easy, right? Now, I don't really see much of a trade on here. Let me see what's on the weekly. Okay, so we got a 3-1 on the weekly. So what we're gonna do is I'm gonna clear this chart. I'm gonna show you how to mark out an inside candle. That ain't how you do it. There we go. All right, I'm gonna come up to my toolbar. I'm gonna use this one down here. All right, boom. Mark the top, long position, short position, price target. So weekly, edit it, boom. Let's me know week, inside, up. That was on that one. Nope, that was that one. All right, here we go. Boom. Number 1, change the color. Number 2, just down. Boom. Inside candle. I love playing these. Activate. So when I go to a lower time frame, they let me know which direction it's going in, because I normally like have all of my watch lists on a chart, and I sit there in the morning, put it on the 15-minute chart, and wait for them, whichever ones to break. Obviously, we got time frame continuity, so this is what we're looking for, just to give you a visual. A break over here, either to there, this price target, or, well, we actually got 2 of them. Bye. Or we looking for just to possibly happen. So 2 things got happen. This, or this, and depending on which way it goes, you can actually end up with, in a week, probably wouldn't happen in a day, but let's just say, you know, because if we're taking a trade off this, we're actually looking for it to make a larger move within the week, and we probably could end up coming down to here. You know what I'm saying? So depending on which way it break, obviously the risk to reward is better, but once again, stop will be pushed up to here. Once it breaks over, stop will be pushed to here. Once it breaks over, and then push to there. And you obviously keep walking it down on the hour chart. And, you know, this could be a day trade or a swing trade. But like I said, probably won't get this type of move in a day. Possibly. Let's see what the ATR is. I really want to freeze up today. just wants to be weird today. All right, so it's like an 80 cent to $1 ATR. So I don't expect to get that type of move, in one day. But basically, I'm just showing like, that's what possibly could happen once we break these levels. So yeah, move draw. So DAL is another one that we could throw on the chart. You know what I mean? So, and now I will show you how I put all these tickets on a chart and look for them. So, boom, I'll go like this. Here, B, boom, eBay, boom, shop, boom. I'm already there. Yes. Good. We're gonna go over SPY and all of that. SPY. That's what's on my list. Most of these are down here on my list. Yeah. Okay. Do that. So what happens is I just sit here and watch this. And once these levels break or I get an alert, these on the 15 minutes, I can see what's going on. And when my levels get there, boom, I'm able to see. Then sometimes I'll just, if that particular ticket I'm in, come here, watch it from here, and etc. Then I just save it. Save it as grid. Boom, so they're there tomorrow. All right, so let's go over SPY. We got to change. All right, so what we got on SPY is we got on SPY as an inside day, mark both levels. We just set alerts on these actually. 417. 417. 5417. Create a alert. Put that 5216. That is my short position. These are my profit targets. Could pivot machine gun down. We could actually end up with this type of move, either break above here and end up with a move like this, or end up with a move like this. And since this is on a daily, honestly, SPY can move pretty crazy. So we can end up with a move, honestly, like this. And this is what you call a pivot machine gun, right? So this could break in either direction and it opens, and we could push on through. Then when we get to this weekly level right here that's down, you can actually add more contracts in here and wait for the magnitude to push on down to here, right? And obviously, if you break this monthly level, you add more contracts here and ride it on down to these levels. Do I expect that to happen in a day? No. So for a day trade, we probably just look for the weekly level to break, hold, and keep pushing this way on down. All right. So that's what we're looking for on SPY. Those are the levels. Screenshot it. Do whatever you're going to do. I am going to show you on the weekly what we're working with. And obviously, with the weekly, we'll be looking for a 222 continue up on SPY. Actually, let me see. We got this big old reverse head and shoulders. So our next target will be here. Now we got full time frame continuity. So we'll be looking for a move possibly to here and here and here. So on a weekly, we could actually open up like this. We'll just change this to boom, strong weekly level, boom, week, 2-2, continuation, up, continuation, big entry on it. Definitely got good risk to reward. Got alert set for it already. That's on a weekly. So what can happen on this weekly is, now, it is a hammer, but it's a green hammer with that time frame continuity. I wouldn't be surprised if we didn't gap up and open up somewhere up there Monday morning tomorrow. So there you go right there. Bring that back in. So, sometimes you zoom out just to see what's going on. And yeah, but as you can see, if you really look at it, it's been on a constant uptrend. You can go to QQQ. QQQ on the daily, we got a 2 up, 2 down. We got a 3 candle on the weekly. So what I did was I used the fib levels. I'm looking for 50%. If we breach 50% in here, most likely we coming down, take out those lows. Or, if we stay above there, which it already is, we push up over this daily, keep going. But if you look at this on the daily chart, we have a, damn, what's the name, keep doing this. All right, but we have a 2 down. So we're looking for a 2 up with a profit target of here. And we could get this on QQQ, break above, activate. We're looking for a break above. And boom, that's the type of move we're looking for. So this is just my 50% level. I can actually remove that. But that's what we're possibly looking for. Or we're looking for, I keep doing this. All right. Or you can end up with this. Open up Monday, break below this weekly level, and end up somewhere around here, which will be there, right? And then because we have a gap here, and then obviously we could continue on down and hit all these gap areas, right? Hit this gap and all of that and continue on down in a day. So either way, those are your levels. Screenshot them if you want. As you can see, we got a green day and a green week, but depending on how these open up, that could change either to end up being staying red or going green. But there's your levels, there's your broader formations. Yeah. One more. Hood. I see hood on my list. Hood. All right, inside candle. Mark the top, the high, the low of this candle. Set alerts. Could possibly pivot machine gun down. And we can end up with this. Bring it to a weekly level. End up just like this. It's on a daily chart, so we'll be looking for this type of move. We can end up with this. Or bring this over here, and we can end up with this. Properties. Boom, there you go. We got room to 1323 from 1292. Obviously, I told you I like to take contracts. All contracts that I like to take are from either 1 or 2 strikes out. So we can look at some contracts real quick, right? So if we're gonna play hood, I'll probably be right here. Look at that. Or maybe at this 30 cent right here, $13, right, a strike below, in the money, at the money. Volume 10,000, open interest, boom, that's perfect. We get a run up before then, maybe switch down to these, and obviously I probably would take these contracts right here. That's because they're right at the money, just a lot safer. It's just how I like to play. So that's the move you're looking for. Only a 30 cent daily true range, but sometime when this thing sell off, it sell off. So there you go. But hood's been on a constant grind up, like for the last 2 weeks. Let me look at this. And there's a perfect example. two down hammer, went inside, and when that broke out and broke above this level, it just done pushed all the way up. Did another two up, two down, inside, pushed up, one consolidated, two down, pushed up. I mean, you could have played this thing. You could have took calls on this at the bottom in June and had some monthlies and rode this all the way up. And this is thousands of percent, but you know, who always stays in like that? Nobody. You feel me? Yeah, we vibing out. What else we got? Look at SQ. All right. We got a two down. Looks like a two down hammer. It's possible to play it. Me personally, I probably, since this is so close to this, what is that? No, I guess you can take it. So we can actually do this, activate. We can move this here. Right. Boom. There's a profit target. There's another little profit target. Right. It looks close, but when you go down to a lower time frame, it's really not that close. So boom. And I will wait for that to break over. So, let me see if we can look at it on the 1 hour. Right. Break over here. Profit target 1, profit target 2. Maybe get some magnitude all the way up to there. But when the daily move, that's what we're looking at. It looks like on a weekend. Now, this is a 2-up hammer, actionable signal. We could break here, right? On a week, open up. And end up falling to here and here and here. But with that time frame continuity that we got, you know, I expect a push on daily, because if this opens up and goes green, we got full time frame continuity and we pushing. So there you go. But this is your bear shot. Boom, long way down, all the way to 66. That can happen in a week. Let's see what the DTR is on here. All right, $2.35, 53 cents. Average true range, which is over like 20 to 50 days. I can't remember. $2, almost $3. So there you go. But we take some contracts. Let's see. Like I say, at the money. There you go. A little spready. I probably would take these right here. 78. Got a profit target of, you know, right there, 78. And boom. You would just ride stringent value in the money all the way up to the rest of those. So that's actually possible. So that's basically my watch list for the week. Go back here. Right. We got SPY, Apple, QQQ, Apple IWM. All my levels are marked. All my levels are marked for this. So when the market opens up, I just sit here on this screen, 15-minute chart. I can see everything that's going on. Let's keep it. Right, I can see everything that's going on. Let me save it. That's how I do. I throw all my watch list tickers on these screens. I save them. You know, I got another one. You know, I just save them that way, and I'll change the name of them if I need more room. I just flip through them. But the main ones that's on my watch list, I have, you know, the ETFs here, so I can see what's going on. Obviously, you always want to keep an eye on Apple, and then I just wait for these levels to break. I'll get an alert. I'll see them break over. That's on the 15-minute chart, so I know it's a little better. And boom, I manage from the 15, the hour, and the 5-minute. Okay, one more thing we can do. We can go over Apple real quick, because I don't think Apple looks that bad for the week. Got here on Apple. All right, so on Apple, chart on this. How we got on the weekly? All right, so on Apple, you got this shooter. There's your shooter right here, right? Now look at Apple. 212, hammer went down, could have entered here, boom, blasted up to here. Obviously, Apple rejected on the daily. We got this hammer, could possibly get a move down to 186. Hey, listen, that's what I'm talking about, trusting the chart, and maybe with machine gunning straight on down, possibly not in a day, but obviously this is on a weekly chart, so you're looking for this to play out for the week, not a day, right? So on a day, we're looking to get, maybe to here, maybe taking out this target, possibly, right? But that's what you can end up getting on Apple. It could open up once it breaks over this weekly 2 up, 2 down off of 191.23 and push on down to 186.60. Move your stop down, get you maybe some contracts that's 2, maybe a month out, and ride this on down. Because if Apple starts to selling off, sellers start piling in, we're coming on down. Big pivot machine gun straight on down. But on a day trade, I'm taking this and looking for 186, maybe 185, right? And I'm taking profit off, pushing my stop down, getting out and going on about my day. But that's what we're looking like on Apple. I do not have a bullish buy on Apple. I actually think we're probably going to sell off. If not, we're going to reverse up and go to who knows where, but nobody's up there because we haven't been that high before. So there you go. So that's a level, that's a weekly level on the daily, and there you go. You can sit on the daily, and we got that gap to fill, which is right here. So that's another target you could be looking at, right? Got a little small gap there and then there. And like I said, we push on down. So, and that's how you manage those on lower time frames. And pretty soon, got an alert set. So if Apple breaks down, it's probably going to pull down the rest of the overall market. So those are the things that's really like on my list for this week that I'm looking at. My favorite setup right now is Disney. Disney is the one that, looks the best. Obviously, Apple looks pretty good too. So Apple, it'd be Disney. It'd be Apple 1, Disney 2. Like I said, Disney, I'm liking Disney because of this, this hammer, this bullish hammer. And like I said, if I show you this, and I go through, obviously there's the shooter that's on Apple, and this is the hammer. These are actionable signals. These are the 3 actionable signals: inside candle, shooters, and hammers. Now, it will be times where, you might get a 2 down full bar like this. Yes, I will still take a trade off it. Or a red bar like this, I will still take a trade off it. But the true actionable signals of the STRAT from Rob are, hammers. Obviously, this is a shooter. And as you can see, this one an inside. And then, when I get an inside shooter or hammer, I'm loving that too. But most inside candles are not always, shooters and hammers. You might get, let me see if I can find any. You can get those. Obviously, you can get these. These are pretty good. And sometimes you get double inside hammers, which is really good. Like, I got high confirmation on those. Like, whichever direction it's going in, that means it's coiling up and it's getting tight. And boom, it pushes. Threes are basically Muller boss. Get one of them, you can get a 3-2-2. And as you can see, it pushes on down. It takes up the high and the low of a 2. And a 3 can never be a 2, but a 3 is a failed 2. So, which means it's a 2 that went up over the previous candle in front of it. Actually, let me get back here. So as you can see, these are 3s. Sorry, I have it on the chart. But this is a 3, mother bar. And when 3-2-2 came on down, pushed that a 2 down hammer, and as you can see, it made its way back up. That is a 2-2-2 reversal. You feel what I'm saying? See? Boom. This would have been your target. This would have been your entry, and it pushed on up. And as you can see, it actually pushed on up all the way to the second profit target. But with a 3 is a failed 2, which means it went 2, failed, and came down, and it broke both levels of the previous candle. And as you can see, this is why I said 3. It was a failed 2. It went up, broke over the high of this, took out these highs, and came down and took out that high and continued down. So that is a 3. A 3 is a failed 2, and a 3 can never be a 1 or a 2. It's always a 3, but a 2 can become a 3 when it's still actionable and hasn't closed. So that's a little trick for you to know. So let me put my broadening formations. Broadening formation. You don't have to use these, but they really work great. And if you go through and start finding them, you actually can find that they are very, very helpful in the market, because as you can see, we at the bottom of this broad information. Every time we got there, we have pushed back up. And now we're looking like this. So we can actually take this, push our way back up to this broad information, probably come back down. And that's the point of price aggregating. You know what I mean? And they get in, they get out. And that's what a TTO is. Triangle, they're out. Boom. The triangle, it went up, they're out. And now it's triangling back up. So that's basically what you get when you get into that. So those are like some basics of the strat, and that's how I go through and find a watch list on the daily. So what I normally do is I will have my watch list, which is right here, right? Go to my options daily watch list, and I will, like, since we got a new week coming in, I'll start at the top, and I'll just flip through and see if I can find actionable hammers. I'll be like, okay, boom, there's a shooter. I'll mark that out. Now, there's a perfect, I played a Brevo for like 40 or 50%, but I didn't hold it all the way through. Look, this is a 2 up, 2 down hammer. Obviously, you see I had this marked, and look, we broke through all targets and all now way up to the last target I had marked out, which once we break this, we probably could continue here, here, and here. Obviously, it's one of those things that you really could keep working. But look at that. That's what I mean by those hammers. When they break out and they break over your level, I mean, you can get magnitude. This is in a week. This is in 1 week, right? Just having that marked out and seeing it break your level. Look at that. And what happened was it went 2, 1, 2. It broke the level, hit it, rejected. Next day opened up and gapped up. So, I mean, you would have probably got stopped out, but if you actually re-entered like here, and that's what I mean by mark, like this gapped up. So you would mark those 2 levels, and whichever way it went, boom. I mean, look at that. Perfect example of the magnitude that you can get. That's why I like the strat. It keeps you from guesswork. And like normally once you mark something out and you see your target, you just know where price is going. I mean, just if you don't have the ability to, scared to trade your own money with the strat, then, just paper trade it and see how it goes. Because when I first got into the strat, I back tested it for 2 months, and then I started to take small trades, and I didn't trust the chart because I was new to the strategy, and like I would get a breakout and I would just sell, and because I was so happy to be green so quick, and I wasn't used to being green like that. And once I started to really trust the charts and moving my stops up and letting candles and the stop loss stop me out rather than just taking profit just because, most of the time I would hit all levels. I mean, I played DIA last week, and I mean, look, it just consolidated like crazy, right? I had some levels marked out. I don't know if they're still on this chart, but I mean, it consolidated like crazy, and I actually got in on this one, and we broke out that next day, and I took profit. And as you can see, a triangle day out, TTO, and then it just went. And then look, this one candle went 2. Which means it failed, came back down, failed 2, went 3, and broke through this broad information. And look, so I actually got in somewhere around like here, and look where it ended up at in like almost 2 weeks. You know what I mean? So that's what I mean by like trusting the chart. Buying time on contracts is important. Buying time on contracts is important. I mean, obviously you can find weeklies and little quick day trades on 0 days and stuff like that. But buying time on contracts, having taking contracts where you had enough capital to be able to say, okay, I'm gonna swing the rest of these, and trusting the charts, because once you break one level, normally you end up breaking the next level. So that's the good thing about the strat that I really like. What else did I play? I can't remember. It was lift. Let me see something. What did I play the other day? One second. I'm trying to find something else I played. Yeah, it was Airbnb. I played Airbnb for like 7%. On the 21st. 21st, yeah. So on 21st, I caught this. Had it marked out. Boom, it gapped up. I hopped in on the gap up. I wrote it up. Got 73% from that. I seen full time frame continuity. I knew the buyers would have been buying on the year, the month, the week, and the day. And yeah, wrote it on up. So like I said, the strat is great. Get this cheat sheet. You can download it. You can Google it. Go in the images. It'll be there. Learn these patterns. I got more videos coming out about how exactly the strat work and fully. But the beginning of this live stream, I go over the strat and the actionable signals and the different strat combos and different things like this. Like the 2122, which is on Disney also, I believe. Let me see. If I'm not mistaken. Yeah, so this would be a rev strat. So 1, a 2, and we're looking for the 2 up. So that's a 122. Similar to a 212, but it's just coming off a consolidation, broke down, obviously grabbed some liquidity, took out some stops, and it most likely going to skyrocket back up. So Apple, Disney's top 2 on the list. Everything else, I'll just wait to see what they do. And sometimes my top 2, top 3 just doesn't go, and I may find a trade on something totally different. You also can use this strategy on, lower time frames, 15-minute, like look at this 15-minute. You can have been watching a 15-minute chart on Disney, and it went 2 down hammer, and you could look at this. This would have been your profit target, and I mean it blew straight past all your profit targets, because this would have been a profit target. This would have been a profit target. This would have been a profit target, and look at that. I mean, you probably weren't looking at like 500%. So I mean, that lets you know. Look at this, another 2 down hammer, going pushed up. Consolidated, pushed up, came down. You would have been at break even. Consolidated, wick down, and boom, still push back up and hit your profit target. So that's what I mean. I mean, you can be a sniper and find trades on a 15. You can find trades with these strat combos on, the 5-minute chart. Look, this went consolidated, broke into a 3. There you go. There's the perfect example of a 122. So you had a 212. You would have took entry on this one. You wouldn't have got much magnitude, but you would have hit profit target. And then this next 2 broke out. Look at that on a 15-minute chart. It went 1. It went 2, 1, 1, consolidated, and broke down hard. You could have rolled that on down. I mean, so look at that. There's a whole day trade right here. Go on entry. Took most of your profit, bumped your stop up right here, seeing what you would have got. And look at that. I mean, that would have been a day trade, and then you could have just played it on down. You know what I mean? These one would have happened, would have broke down over this right here. This would have been your entry. Look at that. Literally could have just walked your stops on down by every one of these 5-minute candles and stayed in this trade all the way, right? Until it broke back over. And look at that. So, I mean, those honestly probably have been at like 800% both ways total. So that's what I mean by the strat work on any time frame. I mean, sometimes I find trades on a 6-hour chart. You know what I mean? Like this is a 3-1. So I will mark this right here, mark it as a 6-hour, and boom. This would have been my target. Where my stop would have been on my weekly chart, this actually would be my target for on the 6-hour, which means sometimes you can use a 6-hour to 4-hour to get an early entry. And then let's just say it broke over this and it broke this level. You can add in, ride that and continue up. So it also gives you places to add in contracts to, maximize profit. So that's another reason why I like the strat. It's just everything all included. Now, one thing I want to give is a disclaimer that I'm not a financial advisor. I cannot tell you what to buy and sell. I can just tell you what I like for educational purposes only. And, I've been through the ups and downs of trading myself, using different strategies such as supply and demand and, technical analysis and different things like that. And nothing seemed to work for me like the strat. Now, I know technical analysis and I know supply and demand. That's another thing that does help me while using the strat, because it lets me look at risk to reward. Like I'm seeing wicks like this, I'm be like, nah, that's probably gonna push back up, which actually helps me with my entries and confidence. So there's nothing wrong with knowing those other strategies, but when you go to learn the strat, just try to forget everything you know for a little while, and you just let the strat work for you, and then you can kind of tailor it to what you like. There's people out here that's doing ICT with the strat, so they're doing liquidity grabs and everything on top. You know, demand is also good. So you just got to find what works for you. And, you know, but first, just let the strat do what it do and trust the chart. Because really, you can trade with just using the strat as a whole. You feel what I'm saying? It's a full all-inclusive trading strategy. It gives you a full plan. Stops, entries, targets. I mean, that's a full trading plan. Everybody tell you, oh, you got to find the trading plan and the strategy that works for you. Okay, cool. Well, what is that? Nobody really has an answer. They be like, oh, well, I can't make a trading plan, or I can't make a strategy for you. It's got to be something that fits you. The strat fits everybody. You can use it for crypto, Forex, futures, stocks, options, pennies. It works for everything. Personally, I am an options trader, and I have found success with options trading. And since I have found success with options trading, that's what I was stuck with. But I will play equities when I see a setup. Oh, I may find a setup, and just playing options on it isn't the best, but I can get some good money off of shares. So that being said, I thank you for tuning into this live stream. I will possibly be live streaming tomorrow doing the market, see what trades I can find, and maybe taking some live trades and going from there. I appreciate it. Please like and subscribe, share this, you know, donate to the channel. I would like to upgrade my streaming platform that I'm using to be able to have a much clearer picture and things like that. And I just would like some help from the community. I don't care if it's $1, I don't care if it's $5, whatever helps. I'm not a grifter, I'm not begging. I'm just asking for, you know, a little contribution for my time, and so I can better the streams for us. And if you got any tickers, please put them in the comments. If you got any questions, please put them in the comments. If you got any tickers and you want me to hop on and maybe do a video on a ticker for you real quick before market opens, just, you know, send me a little cash app and put it in the memo. Listen, this is Slick the Trader. I appreciate you joining this live stream today, and I am out.